Well, small business owners are finalizing their tax returns for this season.
But some filers could be in for a shock on this year's tax hit. Rebecca Walser joins us now. She's a tax attorney and the president at Walser Health and Wealth Management, which is healthy, I'm sure. Yes. Rebecca, thank you for joining us. First question up, why are small business owners expecting to see higher taxes this season?
Well, we got something called the basically employee retention credit. So if you maintained your payroll, obviously this is separate and apart from the PPP program that was administered during coronavirus. But for the periods basically of March 13th, 2020 through the end of 2021, we were getting something called the employee retention credit. And that is if the pandemic substantially reduced your income, you are getting this credit. That's been phased out. You can still actually apply for it, but you'll have to go back and restate 2021. So that's not something that's coming into 2022. And a lot of the COVID area pandemic type of substance and, subsidies are ending. And so that is one of the reasons that, it could be a different year. We also can no longer write off research and development 100%. So if you've got a small business doing R&D, if it's domestic, they now have to amortize that over 5 years. If it's international R&D, if you've got a real niche market and you're importing, exporting something specific to Sri Lanka or something, that now has to be amortized over 15 years. So while we're getting some deductions that are no longer 100%, there are other deductions that did get raised in 2022 that we're hoping will help small business owners offset some of these changes.
Well, Rebecca, I cannot believe that we're talking about filing taxes. I feel like 2022 was just yesterday. Yeah. But what are some dates that small business owners should be aware of?
So it depends on what your filing is. If you're filing a C corporation, you're going to be April 18th, pretty much like every individual your taxes are due. But if you're a pass-through, so if you're an LLC that's taxed as a partnership, or if you're an S corporation, and about 95% of our businesses in this country are pass-through. So it's most people. That deadline is still March 15th, unless, of course, you file for an extension, which would then push your return being due in September.
And how can small business owners minimize their tax hit? I think a lot of small business owners definitely want to know, when you talk about the elimination of some of those credits, what can they do to get that lower bill, that lower hit?
So we have some good news for 2022. We got what we call bonus depreciation section. I know you guys don't care, but tax lawyer nerd here. Section 179 basically usually allows us to expense, like, for example, vehicles, computers, things that are, we normally would say, hey, this is an asset class. It's got an asset class life that has to be depreciated over 5 or however many years, depending on the asset class. That actually in 2022 was done away with, and you could get 100% write-off immediately. So if you bought computers for your office, if you bought work vehicles, those things, subject to some limits of the vehicles, which are too much to go into, but you know how taxes are. There's always an asterisk on everything. But you had a lot more depreciation for bonus depreciation. Also, business meals that were ordered from restaurants went from a normal 50% write-off in 2022. They were trying to help out the restaurants, and they raised that to 100% write-off in 2022. And then as far as electric vehicle goes, the new Inflation Reduction Act, which was signed in August of last year, that kicks into this year, and that allows employers to write off up to $40,000 a year on a business electric vehicle. So even though our 100% bonus depreciation is ended in 2022, we will have the electric vehicle credit pickup in 2023, and that's up to $40,000. There's a lot of little things that are happening that we're trying to still get some deductions and some juice out of from the IRS, and we'll keep working at it.
It's a big deduction.
Yes, it is.
But those cars are sometimes like $100,000.
Yes, that's true. That's true.
So much needed. Rebecca Walser, president of the Walser Wealth Management, we thank you for your expertise.
Thanks, Rebecca.
Thank you, guys.